Okay, so we're going to look at the sale of goods with GST. This is complicated. I've got to tell you straight off the bat. So make sure you're comfortable. Make sure you're ready to go because this is going to take a little bit. If you're doing something that's distracting, maybe don't watch this video. Find some time, do it some other time. Because this, you've got to pick it up. You've got to sort of really think about it. Now, I've already made this video once, and I got halfway through, and I thought, no, that's not good enough. We need to nail this. So this is already here, so we're going to get started on that. I want to show you how this works. It's beautiful. It's so nice. All right. It's at this point that you might want to pause it and read that and think about it, because it's more complicated than other ones that you've seen in the past. Sale of $660 of inventories to Bob on credit. Now that by itself does not look complicated. That without that, I know I'm not covering it, whatever. But it's this second bit that should be a clue that things aren't as easy as they used to be. Cost of inventories was $350. What's actually happening is that was the cost of inventories to you when you purchased. What's actually happening here are two transactions. There's the sale transaction. There's the sale transaction where you sold it to Bob. You sold Bob $660 worth of stuff, and you made $660 worth of stuff, of revenue. There's also, so that's transaction number one. But importantly, there's also a second transaction. You went into the storeroom where your inventories are kept, which is an asset, and you pulled $350 worth of inventories out of your storeroom so you could sell them to Bob. So your inventories have gone down by $350. Now, if you get this idea in your head that every time you sell a good, every time you sell your inventories, not one transaction, but two transactions are taking place, things are going to be really nice and sweet and easy. It's a good idea to get in the habit of trying to break it up like that. Circle around one, circle around the other, and then do the two transactions separately. So I'm going to do the first transaction, then I'm going to do the second. But this is all just happening, this is all just two guys. One guy goes, I want to buy some stuff, and the other guy goes, yep, no problem. So in the real world, we call it one transaction, but when we're doing our accounting, it's really two transactions that are happening at one time. It's pretty cool. Okay, so the sale of $660 of inventories to Bob on credit. Okay, so what accounts are involved there? Well, there's a revenue. Let's do that up here. There's a revenue, what we call a sales revenue. So, yep, sales revenue. That's equal to, what is that equal to? $600. There's a GST, that's equal to $60. And there's an accounts receivable from Bob, and that's equal to $660. Okay, so sales revenue of 600, GST of 60, accounts receivable to Bob of 660. Now, it should be fairly easy here to figure out how that fits into our general ledger. Journal, into our general journal. Now, accounts receivable, Bob, that's an asset. $660. At some point in the future, Bob's got to pay us that. Our sales revenue, that's an increase to our asset, to our owner's equity. So that's $600. And then our GST clearing account, $60. There's our one transaction, and we actually journalize that and finish off and stop. One transaction done. Let's come up with a good journalizing entry for that. Credit sale. And you could write credit sale of the inventories, but I think that's enough. Credit sale. Rule it off. And we can do a second transaction, which is the same transaction. Confused? Don't be. The second transaction here is this. The cost of inventories was $350. Now there are two accounts here that are at play. One that you've met before and one that you haven't. Cost of inventories was $350. You went into the store and you picked up $350 of inventory and you took them to Bob. So our inventories, which is an asset account, went down by $350. That's asset number one. That's account number one. The second account you've never met before. It's called COGS, COGS. And accountants all across the world are familiar with the word COGS, which stands for cost of goods sold. Pretty straightforward, COGS. Now, what sort of account is COGS? What we're doing here, I'm not going to write it down, but it is important. It's an idea that you can get into your head. We're expensing an asset. So we had an asset. It's no longer an asset because we don't have it. It becomes an expense. It's an expense it's an expense that was accrued during this process of selling something. So cost of goods sold is an expense account. Okay, and in this transaction, our expense account has gone up by $350. That's it. That's all we need to know now, because we can figure this out. Inventories goes down by $350, so that means that inventories must be an asset going down, which is a credit. Cost of goods sold is an expense account going up. Now, some teachers would tell you to write cost of goods sold, but every accountant in the world knows what COGS means. Inventories goes here. Whew. Now, make sure you journalize it. Don't forget to journalize it. What are we going to journalize it with? Sale at cost price. Okay, so you can see, hopefully, that when you're doing this kind of thing, when you're selling something, and this is the reason I've talked about this before, this is the reason that we've been talking about mowing businesses and hairdressing businesses for so long, because we didn't want to have to talk about the cost of goods sold, this concept, because it is a little bit complicated. The nice news is that it doesn't really change too much. Every time you sell goods, you have goods like an inventory. Every time you do something like that, you've got to deal with these two transactions. Two transactions take place. Okay, guys, this video has been a long one. I hope you were comfortable. I hope you took the time. I hope you took your notes. If this doesn't make sense, that's okay, because it's complicated, it's hard, it's difficult. So if it doesn't make sense, make sure you talk to me and we can talk about it one-on-one. That's all I'm saying, guys. That's the sale of goods with GST. Good luck, do some questions, check your answers often, and we'll see how we go.